keep that trend on even for our final session. A very interesting topic in store. Let me quickly bring our speakers on the main screen. First up, we have with us Siva S. Raman, who's a Managing Director and CEO with National E-Governance Services Limited. In fact, he is from the civil service and has been deputed to the nesl by the C and AG of India as a Managing Director and CEO. We are also joined by Mr. Srivals Kumar, who's the independent corporate and also a legal consultant, and he was the General Counsel and Senior Vice President Legal for Raheja Universal Private Limited, and he's also had the experience of working with Bhatia Airtel, Tata Teleservices, Star TV, Mumbai International Airport, Flipkart.com, and the Rustomjee Group. And moderating this final panel discussion for us, we also have Mr. Tarun Bhatia, who's a Managing Director and Head South Asia with Kroll. In fact, he is someone who is in the business intelligence and investigations practice of Kroll, which is a division of Duff and Phelps based in the Mumbai office. So yes, it's time for our final panel discussion, and let's quickly bring on board our set of speakers. Mr. Kanaiya Thakkar couldn't join us because of a meeting at his office that got advanced. But however, three of our speakers are here and they'll join us in just a couple of seconds. We'll get the session started for all of you. Well, delegates, meanwhile, let me again remind you all to use the discuss button on your right side of the screen. Please ensure your questions keep coming to our panelists. We had a fabulous round of discussion with all of you. We'll continue that. With that, let's get the panel discussion started. And Mr. Tarun, over to you, sir.
Hi, good afternoon, everyone. Just confirming, am I audible?
Yeah.
Okay. So I hope, firstly, everybody who's joining this event, you and your family members and colleagues are safe and healthy. We were discussing backstage, and I was just thinking the irony of the situation that we are gathered here virtually for a corporate insolvency and distress summit, whereas for last 8 to 10 months, the entire human species and us have witnessed high level of stress in our personal lives. And I mean, I think, we've coped well as a community. But I do hope and pray that, we're closer to normalcy returning to our lives. We're all excited to be part of this discussion, and I'm sure during the day you've heard from industry experts about different facets of insolvency and bankruptcy and how India, specifically is tackling current challenges posed by pandemic and its impact to the larger economy and the credit community. This group has gathered here to talk about the theme safeguarding creditors' debt enforcement rights to ensure asset recovery efforts. Personally, this subject is very close to my heart as, over the last 5 years at Kroll, we have been working very closely with banks, NBFCs, corporates, and law firms, supporting them in tracing assets of corporate debtors and helping them in enhancing the ultimate recovery. For a very long time, we're talking about pre-IBC era here, business owners assumed that they would always retain control of their businesses and other assets that they own, even during a distress or despite being classified as an NPA. I'm wondering how promoters would have behaved if IBC was not in place during this current pandemic. Thankfully, it is. Empirical data also suggests that frauds peak during disruptions and events that we are undergoing right now. Historically, most debt resolution packages that India had seen, used to provide predominantly loan extensions without much of a downside or personal implication, downside risk or personal implication for the defaulter. This scenario changed materially post introduction of IBC, and for the first time, people lost control of their business. If they were guarantors, they were obligated to make good the loss. So their world changed upside down. And while IBC is an enabler, what we soon saw through our experience, while looking at some of these resolution cases, the borrowers who were predominantly willful claimed that they did not have the ability to repay, even if they had committed fraud. This is where we kind of stepped in helping identify assets which were still in control of these borrowers or people associated with them. And so far, it's been a fairly successful journey of tracing assets in India and other jurisdictions. The other question that came around when IBC was introduced and around enforcement, and the objective was to keep the borrower away because they had enough opportunities to correct their wrongs, and hence IBC introduced the famous 29A section, which kind of lists down the eligibility criteria for bidders. Having worked on many 29A checks, including some of the largest IBC cases that have successfully concluded, we have consistently seen that the borrowers or the debtors continue to make an effort to retain control through a backdoor entry. And so far, I feel the COC and IBBI has done a tremendous job in ensuring that they have shut that door. But we see that this level of activity continues. When we look closely at the development of the last 4-5 years and the likely impact of COVID-19 that we are now witnessing, as a group, we identified 4 key themes that we felt were relevant when it comes to enforcement and recovery, and we would like to share our thoughts and even hear from the audience on the same. The first is the regulatory and legal framework, from an enforcement and recovery point of view, with greater focus on the nuances that IBC versus SURFACI debate brings about. Secondly, and this is something which is happening in the real world, to look beyond the regulatory purview and understand, are there other motivators or other mechanisms being used by the creditors to enhance recovery? The third is to do some form of a look back to see if, post introduction of IBC, has asset recovery process and the percentage of recovery actually improved? And if so, what's led to that and what more needs to be done? And lastly, but what I believe is one of the most relevant areas of discussion for us going forward as a country, is that our level of information and quality of information available digitally is improving. And technology and timely access to information should positively influence debt enforcement and recovery. To discuss this and more, I'm joined today by esteemed industry experts, Mr. Siva Raman, MD and CEO, National E-Governance Services Limited, Mr. Srivals Kumar, who has been a corporate lawyer and is now an independent corporate lawyer and a legal consultant. Unfortunately, Mr. Kanaiya Thakkar from Ambuja Cements couldn't join us, but I hope between Mr. Raman, Mr. Kumar and I, we are able to address some of these themes and answer your questions. I encourage the audience to keep posting their questions real time, and we will try and address them and bring them into our live discussions. I now request Mr. Raman and Mr. Kumar maybe to share their opening remarks and their thoughts on this topic for maybe 5 minutes each, and then we can take on the specific themes and delve deeper into them. Over to you, Mr. Raman, and thank you.
Thanks, Tarun. Thank you to Akriti and Legal Era for having invited me over for this session. It's indeed an honor and a privilege to be amongst all of you. The IBC, of course, as Tarun said, is one of those path-breaking legislations which has seen an incredibly speedy implementation. I think it's already put India on an entirely new institutional growth path. Having said that, I think there's much been talked about the fact that IBC has itself seen a moratorium in the last 6 months. But the statistics that we keep reading in the papers and what we have also known is that still there are about 8,000 cases as of March 24th, which are knocking on the doors of the NCLT. So in terms of a institutional mechanism and a way forward, I think largely speaking from a creditor's point of view, I think we are still going to see a lot of action under IBC and a lot more very successful resolutions through the NCLT. So given the fact that we are today talking about safeguarding the creditors' enforcement rights, I think we should step back and applaud Dr. T.K. Vishwanathan, who was the chairman of the DLRC, for having even thought about the information needs of a resolution process. And as National E-Governance Services Limited, what we've done in the last 3 years plus is we have created India's information utility. This is a unique concept, but I think the minute we look at information utility as a credible, authenticated source of credit information, we are talking about the utility of any stakeholder in a resolution process, picking up information from the IU and presenting it to not only the NCLT, but also to the IP or the COC as evidence that underlies your claim, as we may talk for creditors. So as information utility, what we have done in the last 3 years is really enforce creditors' rights. And it's really, I think, a core point where India as a country could look forward to and even an increased, and a better rating to, ease of doing business. Because one of the important points of DODB is enforcement of contracts. And just to give you a bit of an understanding, today the information utility holds 110 lakh crore of outstanding of companies in India. We're talking about banks, NBFCs, investments in debentures and bonds by mutual funds, insurance companies. We're talking about intercorporate advances. And finally, what's being worked on is also the public deposits that companies raise. So what we're really talking is the design of IBC in terms of providing information is about the information utility serving as a one-stop shop for providing the entire indebtedness profile of a borrower. And this, as the RBI had very timely about 8 months ago written a letter to all the banks saying that given the fact that the information utility has the largest source of credit data, this is something which should be exploited by creditors even on an ongoing basis. So what we're really talking about is the creditor's ability to see what is it that a borrower has got in the entirety of their debt profile. And this is something which the banking system is now slowly catching on. Of course, as a technology company, we are providing all sorts of methods where the banks can use APIs and pull the data from the information utility for a particular data pan. So all that is happening. The larger point is going forward as a developing country which is growing fast, and I think we'll see a lot of very high growth in this country. We're also talking about the fact that when a company hits a bad patch, it is important for the creditors to be given an alert that something is happening to this particular company. And the beauty of the design of IBC is that the information utility not only holds financial contracts, which is mandatory for lenders to provide to the utility, but all operational creditors are also encouraged to file their invoices or their contracts into the information utility. So just to give you a very quick example, we're talking about an MSME which has not been paid by a particular company, and the MSME files the information for default in the information utility. What happens there is that after due notice is given to the buyer, there is an alert that is sent out to all persons who have got an exposure to that buyer. Exposure implying it could be a financial exposure as in a bank, or even other operational creditors who are supplying to that particular company. So what basically happens is that the community of creditors gets information which is slightly in advance of things really going back. So if somebody is reacting to the fact that company A has not paid MSME B, and this has come to them as an alert, they might just want to ask another question of the company saying, hey, what's going on? So, it's really about being able to provide information at the right time and at a fraction of a cost that today the information is available for. So, as you would well know that NESL is a government company, and therefore it is fulfilling a mandate that is, given to it as part of the IBC, and therefore, really, I think we should all applaud the fact that the IBC has been a very futuristic law. There are a lot of aspects of the IBC which are taking us into the area of digital evidence. It's really about moving to evidence which no longer requires pieces of paper to be brought to an NCLT, but it is the ability to download a record of default from the information utility directly at the NCLT and attach it as part of the petition, and that goes forward to the NCLT at an admission stage, followed, of course, by the fact that even at the claim stage, this information can be used. So, I just thought in my opening remarks, I'd like to talk about the fact that we are already in a very, very progressive stage of development in the space of insolvency. As you would all know, was, probably fits and starts. We've had several legislations over the last 30 years, but nothing really had the seriousness of the law behind it. And as Tarun very correctly said, just the fact that a promoter or a management fears loss over their company or loss of their company when their case is admitted to an NCLT, I think that itself is one of the best parts of the IBC. In fact, I can only quote Dr. Sahu, the chairperson of IBBI, where he says that the best measure of the effectiveness of the law is when the law itself is not needed. Because the law has a fear element in it, there is a space available for creditors and debtors to come together and do a settlement without having actually to invoke the IBC and go to NCLT. Thanks.
Thank you, Mr. Raman. I think that sets good context, especially with the combination of use of technology to address some of the genuine concerns that creditors have had. But equally, I think an area which even in IBC doesn't get as much reference is the operational creditors, and with COVID and the whole concept of Make in India, taking interest of operational creditors is equally important, and I feel technology will play an important role. We will try and talk a bit more about that. Maybe I'll now ask Mr. Kumar to share his initial thoughts, and then we can all get into a more open discussion. Mr. Kumar?
Thanks, Tarun. At the outset, I need to thank the Legal Era entire team for enabling this platform for us to share. I think all the participants this morning would have some exciting sessions, some knowledge sharing that would have got a very important inputs into the way they can look at this new processes. As rightly mentioned by both Tarun and Mr. Shivraman, I believe that IBC code per se, when it was introduced in 2016, it was basically an integration of various insolvency law which were in bits and pieces across various statutes. And the earlier law more looked at it when the net worth had eroded or you were at the fag end of a life cycle of a company. Only then you looked at the insolvency or what you can do. The new process by which either a financial creditor or an operational creditor, or in case the corporate debtor himself, voluntary could come across to the NCL in terms of bringing some impact over there. I think that's the biggest change that has happened. It's not happening once the entire system has gone down to shredders that we're looking at trying to save the company per se. Because as you all know, a corporate is not just the corporate itself. There's an ecosystem around it. A lot of stakeholders are involved. One of the important one will be the creditors. The second are the other customers, etc. So I think an impact of a company per se doesn't stop to one person. It has a ripple effect across the economy. So one of the important things now we look at is that aspect. Secondly, being a new law, The most important aspect I think we have seen over the last few years of its journey has been the evolution of the law, both by amendments and by judicial precedents. And I think there we have to say that the NCLT, NCLAT, and Supreme Court has come with some reasonable good judgments of interpretation, which facilitates the entire gamut of NCLT itself. And as we all know that IBC is providing for an expedited manner in which a corporate insolvency resolution process happen, keeping in mind the maximization of the value of the assets. Definitely there's going to be bound of conflict between the creditors' interest, the operational creditors' interest, the financial creditors, some customers. So it's going to be a lot of some statutory dues. So the conflict is going to there. What one has to see in the current gamut of the law as it stands, are we having a fair distribution of the same? And I think as we evolve our journey, we have seen already that the judicial interpretations have been helpful in making sure that things go in the right direction. With these thoughts, I will say that the three other aspects which definitely we should touch upon during the discussion would be the aspect of promoters coming back under or their restriction under 29A, whether a SARFAESI action presides over or is complementary to the action under CIRP. And lastly is the offset of other laws, maybe whether it's a PMLA Act, whether it's an assets under attachment by an ED. I think these are finer points which definitely impact the ability of a creditor to get back the money he has invested in the company. And we must all keep in mind that the loss of a major chunk of a creditor's amount in any corporate is something that is going to have a loss in the ecosystem because the fresh generation of funds needs to come in. So I think that has to be kept in mind when we look at the interest of all stakeholders. With these thoughts, I think, Tarun, you can take the back.
Sure. Thank you, Mr. Kumar. I think, again, a couple of very pertinent points. One is, maybe if I take it in the other order, we have seen in the recent past, especially when some large frauds have been announced, and clearly, enforcement agencies and authorities have reacted swiftly. I think the implication that has on overall asset recovery needs to be looked at from a larger lens, including international investors, because India is no longer what you see in India. India deals with its own perception internationally, but also there are international creditors who may be taking a different view. I think that's an important aspect to definitely consider. And I think the second is, and we briefly touched in our other remarks, there are multiple other solutions which today are available to creditors. Litigation funding as a concept, and we can spend some more time on that. So I think we have a lot on our plate, and maybe we have about 15 minutes to discuss some of these things in greater detail. What I wanted to check, and I'm coming also from our experience when we have investigated some of these matters, when we have both forensically but even from an advisory point of view looked at resolution processes or where creditors are trying to get the best value for them. There has been this divided opinion on IBC versus SARFAESI, and IBC has definitely created a different culture, but actual data on IBC also suggests that majority accounts are right now under liquidation. The number of accounts which have resulted in successful recovery, for some large accounts there have been really very strong recovery, but as you go down the pipeline, the recovery rates may not have been as high. Versus SARFAESI, which was used both by creditors for institutional debt but also retail debt, and at least our understanding is its impact on retail debt has been very significant, mortgage finance and so on. From a practitioner's point of view, Mr. Kumar, or somebody who is in a way part of the IBPI ecosystem, Mr. Raman, how do you look at this, and do you think IBC and SARFAESI can go hand in hand, and it's more about which is the right fit for a particular matter, or do we believe IBC will eventually lead to SARFAESI fading out or something else being introduced? I'm sure the audience would want to understand which direction is this headed. You're on mute, Mr. Kumar.
Sorry. So if I may say that while SARFAESI was an earlier act, both the acts had overriding effect clauses in the agreement in their statutes. But IBC with the later act and having a specific clause to that effect in section 238 of having a overriding effect, I believe any proceeding that is taken board under a IBC CIRP provision would mean that the SARFAESI action goes to a standstill. And I will further elaborate that actually speaking, there are 4 stages. So the stage 1 is that when an existing SARFAESI action is already initiated, a CIRP action is initiated. In that case, till the time the admission of the CIRP process happens, the SARFAESI action can conclude. And we have various scenarios in the past of judicial precedents where multiple scenarios have happened. Scenarios where at the time the CIRP was happening, a closure happened of the SARFAESI, a 25% part payments were made. But the judicial precedent around that was that since the complete payment has not happened, the possession of property has not changed hands. Once CIRP comes, which is more to maximize the assets, and the secured assets are part of the pool of the company, of the corporate debtor, it has said very clearly that in such cases, the CIRP overflows that, and hence the purchaser has to give back the property and his 25% comes back to him. So in that sense, one has to look at the process. So if I look at it, the first stage would be whether the admission of CIRP has happened. If not, this SARFAESI action can be concluded and the conclusion overrides it, number 1. Second, if there is an admission of the CIRP and the moratorium kicks under 14, then under section 14(1)(c), the SARFAESI is specifically set out to be put on hold. Then the stage 3rd comes when there is a resolution application coming or resolution plan is approved. Then you go as per the approved plan and go if the secured creditor has been part of the process or not, because there have been scenarios where few people have decided not to be part of the CIRP process as a committee of COC and then kept out and want to challenge it later on. Assuming they are part of the COC, either they would have some voting power which is beyond the requirement and they save the property or take a decision towards liquidation, etc. So if a resolution plan is approved, then you go as per the resolution plan as approved by the adjudicating authority, which is the NCLT. Lastly, if there is no approval or there is no resolution plan, you go to liquidation, in which case section 52 gives precedence to the secured creditor in terms of those assets. So I think one has to look at the stage where it happens and analyze what is the right time to move in. And so there are a lot of precedents over there. But one thing I must say is that it all depends on how you want to do the action, depends on various factors which a secured creditor needs to keep in mind in terms of, is there a revenue stream available for further cash flows? If there is an indication of a financial revival, does beyond the mortgage assets, are there some assets which are there which can maximize the assets? What do you see? Is there, would you be there asset stripping or diversion of funds you expect from the promoters or the management? What do you see? I think there has to be a lot of factors kept on the table before which you conclude that should we move a SARFAESI action or we should move into a CIRP action, and how the defenses has to be worked out. So I think it's a mixed bag. One cannot take a final decision out of that. I think that's a say I will say. And with these thoughts, I will request Mr. Shivaraman to just look at the other aspects from his side.
Sure, thanks. So, I think it's really about calling a spade a spade. So, what do you want out of a law? As a creditor, it's very simple. You want your money back. And I think somewhere SARFAESI had a brilliant section 17 which allowed for a creditor to walk in and take possession of an asset, which frankly, I think it's one of those, very bold laws. But unfortunately, from 2002 onwards, we've been seeing a dilution of section 17. Today, a bank, and frankly, we've had a very, very close interaction with all the large banks, and therefore, I'm probably speaking more from a banker's point of view right now. The bank does not want to get enmeshed into problems of recovering an asset through the very long-winded process of civil law at an executive magistrate level. Because finally, the possession of the property has to happen only with the help of the executive magistrate. Now, it is, I think as a country, we have excellent laws, but it's really, the devil is in the detail. And how a law gets implemented is what's critical. Even today, if you open any newspaper, you will have a lot of advertisements and notices put out by various banks where they are taking action under SARFAESI, and so property description you will find is coming under auction, or there is something related to a SARFAESI action. Now let's look at IBC. Now IBC is purported to be a law for resolution. In fact, often we have this debate in IBBI in the meetings that, is it resolution or is it for recovery? And the banks obviously take a view that it's for recovery. The, regulator says, no, it is a larger concept of resolution. Be that as it may, the fact remains that the kind of collections that have happened under IBC have been phenomenal. In little less than 4 years, I think we've seen recoveries of nearly 3 lakh crores. I might be slightly wrong on the figures, but it's about that much, which all said and done is a much larger multiple of any recovery that we've seen in the last 10 years under various laws in the country. So it is really important for us to be able to appreciate that the power of IBC for corporate resolution comes from that very fact that if the case gets admitted, the management loses complete control. And it goes over to a brilliant concept which IBC has brought in of the insolvency resolution professional. And this is really where I think as a country we've moved forward, because we've allowed non-government persons to come in as resolution professionals, which has, I think, taken the entire, sort of professionalism in the resolution process to a next level. Having said that, I think it's also important to know that a lot of cases which have gone into liquidation under IBC were cases that were actually struggling under a BIFR. So, these were probably cases that had been already flogged to the death, and there was practically nothing left in those companies. And even a resolution under IBC may not have been viable. And therefore, the statistics show that something like 650 cases have gone under liquidation out of a total of about 1,100 or 1,200, which have gone through resolution.
Mr. Raman, sorry, if you don't mind, and just a follow-up on that, and I think you're right, because India deals a lot with legacy issues even now. We're dealing with historical NPAs. But if I were to put either of you on a spot, and, if we look going forward, because the idea is, it's such a landmark act that it is supposed to solve incremental problems. From our initial experience, is it fair to conclude that IBC, whether it's resolution or recovery, and you're right, different people look from a different lens, is a solution for mid to large corporates, and SARFAESI could be a solution for mid to small corporates? Is it fair? Because we have seen about 4 years of IBC. It's still, I would say, in its infancy. Internationally, it takes 5 to 7 years for an act to really stabilize. So maybe it's not fair to expect too much from IBC in that time frame. But we are going to see a lot of small businesses come under significant pressure once the moratorium gets picked up. In terms of repayment pressure, the business pressure is already visible. At that point, as a creditor, when that wheel of protection has been lifted, what should I be thinking? Am I thinking resolution? Am I thinking recovery? And hence, should I think IBC or should I think SARFAESI?
So let me take a stab at that first, and then I'll hand it over to Srivals. So the way I would look at it is, yes, it's a nice visualization that the large corporates come under an IBC, because let's be honest, the bargaining power of a creditor is greater under IBC. And I think today, that adage, that old adage is more true than anything, that once you give money to a large company, then the problem is with the bank. The bank is the one which worries about it. Whereas for individuals who take loans, it's always the individual who is worried about repaying the loan, and the bank is in a slightly stronger bargaining position. So I think, it's really economic balance of bargaining power which really comes in, and that I think is the inner motivations of banks to use something as strong as an IBC to take large NPAs on board and tackle large NPAs. So I think that's a very nice distinction you've drawn. I would say that with a pre-pack being talked about, it's possible that a lot of smaller companies which have got into a resolution stage might end up seeing far quicker resolutions because of pre-pack coming in. And pre-pack is really about taking the data a priori and then coming to the NCLT and saying, listen, this is the resolution. It's already been discussed. And then the NCLT sort of takes it through its procedural course and then accepts it. So, I think that's another aspect that we need to wait for. And finally, under IBC, the individual resolution or individual process of how to get over bad loans has not even kicked in. So we still do not know how that will play out. And I think the government is rather sort of wise and experienced with all the laws that have played out over the years. And I expect that a very practical approach would be taken even for individual resolutions under IBC. But I think the largest point I would like to make, and I'd like to go into RERA, because Srivals was also talking about RERA when we were discussing backstage, whether it is RERA as a panacea for people stuck with homes that have not been delivered, or is it IBC as a home buyer, or is it SARFAESI for small companies resolution or recovery? Let's talk about recovery in SARFAESI. Or is it IBC for tackling the large companies? I would say that there is a marketplace for laws. Let's also look at the fact that we should have enough opportunity and avenues for creditors between different laws to pick and choose and see which one fits which situation the best. And therefore, we should not give up on old law just because a new law comes in.
Sure. Srivals, any comments on that? You're still on mute.
Definitely. I think I completely agree with Siva over there that the IBC has been come with a very new, novel way. But definitely when a new law comes, people try to exploit it, or someone may use it as a recovery tool. But largely the intent is for resolution. And that applies more to larger corporates rather than to smaller. And I think the focus should be on a SARFAESI or some other law to look at the smaller recovery rather than come in this, because you are going to then kill the goose itself rather than look at the egg itself. So I think from that perspective is very important you look in that format. However, I think the one concept which I think there is require some amount of introspection by all stakeholders is the threshold level for initiating a CIRP process. Would you require that a corporate with a turnover of 10,000 crores get triggered by 1 lakh of a operational creditor? Or it should be that we have some percentage of turnover, or we may have an original jurisdiction for a very big matter directly with NCLAT, and rather than the NCLT being smaller benches for operational creditors. I think that thought has to become, and largely to that effect is the role of IRP, because the resolution professional needs to understand the sectoral knowledge also. Sometimes we find the sectoral issues are ignored. So I think a mix of all these, and as you rightly said, 5 to 7 years is a horizon for a law to get stabilized. Smaller tweaks like this would go a large way in doing so. And we also need to keep in mind that the insolvency provision for individuals against corporate guarantee given by whether promoters or guarantors also has a separate limb, and that has not been stayed. So you can also do that. The testing is currently happening at Delhi High Court, where the Reliance and Anil Ambani matter is currently stuck. Definitely we will see the light of the day within a year. And I think thereafter there is another exposure that whether the personal loans given or the guarantees can also be exploited by the secured creditors. So I think we have a mix of options, and definitely that will do a large play in how a secured creditor drives the business.
Sure. So I think the jury would always be out on this one, but what I'm taking away is that today with 4 years of IBC and enough and more experience from SARFAESI, and creditors, in their respective experience have a fair understanding of what is relevant or most suitable. And I think hopefully with passage of time, that will only stabilize. I wanted to just change tack. I'm also cognizant of time, and we briefly spoke about access to information. And one of the things, especially when you compare India to international market, is the quality of data. Whether it's pre-packs, whether it's access to information, when you take control of corporate data from an RP's point of view, I mean, some of their pain points are very severe. Two, when a bidder comes in and gets into a data room, now with the whole concept of IU, information utility, and access to information, again, one of the things we believe is there will be more transparency. But a question that I again wanted to pose to you both, and this is coming from us having represented investors as well as corporate debtors, is the understanding is even today, despite IUs coming in, the access to that information is closed door, or predominantly to creditors. Whereas it's the creditors who are coming in to IBC or SurfaceC to find a resolution. The other thing being, in India, why recovery is taking so much focus is we are capital starved. So today, I think one of the major decisions for a bank to decide whether they go to IBC, SurfaceC, or anything else is also provisions. And when there is shortage of capital, what is influencing is what action do I need to take and how it impacts my immediate balance sheet and that quarter's result. So in that backdrop, how do you see more information flow, access to more transparent data can aid in the whole resolution process and help in ultimate recovery? Because today, and we have seen that, whether it's Jet Airways or other accounts, just to estimate the level of debt beyond, what the banks have given is a task in its own. How do you see that landscape changing?
Sure. So let me take that, Tarun, and I think it's a very valid point. As information utility, just 2 weeks ago, we launched a specific software for helping resolution professionals to carry out the CIRP process. So it was launched on the fourth commemoration day of IBBI by the Minister of State for Finance, and this software is really geared towards creating a data room. And that's really the point where we are now working with the IPs to get them to use this software, wherein information that comes to the IPs will be entered onto the software and automatically a virtual data room will get generated. There are a lot of other information aspects. So therefore, as we build the ecosystem, it's so vital for, existing cases to be brought into that virtual data room. Is there a case for that? Is there any case open against that particular borrower across the country in various courts? Now, that's a very critical information that needs to come in before a resolution applicant may want to take his final decision. So there are various parts of the data which need to come in, and better informed decision makers who, as you correctly said, I think there's a plethora of money waiting offshore to come into India to pick up assets which are distressed assets. And I think it's an ideal opportunity for us to take this forward as a country. And it's very important that, so as part of the software that we have created, it's basically called the Platform for Distressed Assets, PDA. So that's basically a PDA software it's known as. So there is an auction platform also along with this, where you could, the RP could take a decision that this particular, asset needs to be auctioned, and therefore it goes into auction. So, we are talking about creating the necessary infrastructure with regard to information needs, and that's a very important point. I would also like to just touch upon the fact that, in the country today, we have got multiple repositories. We've got, RBI repository by the name Kroll. We've got an MCA 21. We've got a SurSci. We've got information utilities now. We've got credit bureaus. Now, there needs to be a very good handshake between these. And that's something that is being worked upon at the government level. And I think it's important that the information in an IU be authenticated by both sides of the contract, both parties. There is a certain higher credibility to the information that lies in the IU. And therefore, we have also taken it up with the authorities that this information should be used by all stakeholders who want to look into a corporate's debt profile. And for that matter, the debt is not only financial debt, but could be operational debt too. So this is something which I think should definitely happen. We are, I think, at a nascent stage of making information more accessible to the people who need it and make it more current and topical. So I think you really touched upon a very, very crucial point going forward.
Tarun, I completely agree with what Siva said, but I would like to add one more thing. While a noble step has been taken by getting these IUs to have this database, you will understand the real estate sector has gone a tremendous change after the RERA has come. As a regulated sector, earlier when we look at as a zero transparency, now you see every regulator has built up the rules and the best example is MahaRERA in Maharashtra, wherein if I have to register a project, I need to give the project cost. All the money comes in an escrow account. I can pull out the money only under a certification from a chartered accountant and from a certified engineer, how much progress has happened. The penalties are a percentage of the project cost. And lastly, the encumbrances are disclosed. All the public approvals are in place and shown to people. So if God forbid, and there's a provision if a promoter collapses as a builder because of certain reasons, a new promoter can be brought in either by the regulator or by the association of the allottees who have booked a flat or unit in the project. They have the entire data ready to pick it up. So I think as we go forward, we should not be linking, well, definitely IU as a platform is very good, but I think there should be a handshake between a sectoral level database, handshaking with an IU, and that get used at an IBC domain, which will be a good combination because the sectoral nuances are something which only a sectoral regulator can find out. And as we see in telecom, in airports, in electricity, I think all these regulators are bringing in wherein they are keeping a control to ensure that the service provider doesn't collapse and puts the customer in the lurch. So similarly, I think if there can be a small handshake, I think that will go a long way in ensuring things go in the right manner.
Yeah, I mean, I think, for us there, it's small beginnings, but a long way to go. Because if you look at international best practice and, in a way what we are trying to achieve through Aadhaar or any national identifier, today MCA is significantly digitized. Getting access to corporate information is much better, actually better than many advanced countries. The key for a successful debt resolution or debt recovery, in our experience, has been when all of these talk to each other. So your MCA talking to your IBBI, talking to IU, talking to RERA, talking to income tax, where and other such databases, while giving the comfort on trust and protecting privacy, will change the landscape. Because today, what we have seen is, we are brought in to do asset tracing on accounts which were NPA 7 years back. So, and an account gets classified as an NPA, as you know, after many quarters, because you grow over, you manage, there's evergreening at times. So it clearly suggests that, the road to recovery or path to recovery is very long. Again, we are dealing with legacy assets, but, our process to classify an account as a fraud, and again, the implication on provisioning. So the challenge we face is we try and make tweaks to different aspects of law and regulations which need to be done. But at some point, different regulators and different databases or platforms need to start talking to each other, which will eventually benefit the creditors, whether it's operational or financial creditors. So I think that's a big, shift. One last point I wanted to touch, and maybe, again, to put both of you in a spot, and I enjoy that benefit of being a moderator, because we are towards the end of time, is, again, from a crystal ball gazing, and, we can have a full session on what next. What would you say is one significant change that you would like to see with respect to enforcement and recovery, which you feel will give more power in the hands of creditors to benefit and get ultimate recovery? What would be that one thing that you feel needs to be brought in, both of you?
Go ahead.
I have started, and I think I shared that point in the last session, is that I think we need to have a certain threshold limits on which matters should go under an IBC and which should go under a SARFAESI, because a 1 lakh default now even to enhance to 1 crore, I think you can, with a 1 lakh default also, you can bring a big corporate down. I think that's not the intent of, and so everybody's using the IBC as more as a recovery tool or a threatening tool because there is a fear that the corporate will lose the control of the company. I think pre-existing dispute is a different concept, but overall, even if there's a due, for a small default, it should not happen. So I think there has to be some nomenclature, which I believe show that to put a check, like the way 29A was inserted to put a check on the promoters doing thing. I think a small check needs to be done with smaller creditors, not pulling something big on a large functioning corporate. I think that is one thing has to be relooked from a threshold perspective, something like a CCI or something in all sectors you have. I think that's what I will say, look, it has to happen. And the second is the IRPs needs to also look at it, look deep dive into what exactly is happening before they come to a conclusion of putting it on board.
So, taking Srival's point a little forward, I've actually had cases, as an information utility, we are data blind, we don't see the data, but actually have had feedback from a couple of operational creditors where they have talked about the fact that there are pending payments of 400 days and 500 days, which have come through only because they took the petition to NCLT. It was not even admitted, but the copy of the petition was sent to the counterparty, to the buyer, and there was an out-of-court settlement. So I honestly feel that the law less used is a more effective law, and therefore the deterrent power of an IBC is something which is supreme. And I would be very sad if that were to get eroded or diluted, because it is that power of IBC which is actually making a lot of cases settle. So another statistic, 22,000 cases have been taken up before NCLT in terms of filing a petition. 12,000 cases have been withdrawn for a variety of reasons. And we know that most of the withdrawals are because there has been an out-of-court settlement. I mean, it has never even reached the court. The parties have settled. So I think there is an untold story which may not be that, sort of well known to people, that the number of settlements happening between creditor and debtor are on the rise. And therefore, I feel that the creditors today have sufficient power with them. I honestly would not really look at putting more power in the hands of the creditors over the debtors, because I think there has got to be also, enough on both sides. It's not just always a one-way street, but with the IBC and with the future of IBC in terms of resolution packages for non-corporates, because to remember, we have, I think, like 5 crore businesses in the country, which are not corporate, but they are small businesses of various sizes. They may also require, very quick turnaround packages under an IBC. So I would really look at, letting IBC play out for 3 or 4 years more. And I think we will see a remarkable change in the economic, bargaining power that is already created in the country.
Right, sure. Sorry, you're on mute, Srivals.
Sorry. So I think here the one point I like to say is that having spent a lot of my time in courts, in tribunals where these matters are held, I think because of the multiplicity of such matters pending before NCLT, we have observed that the timelines of 180 plus 90 are impacted because out of, say, 100 matters listed before a bench in a day, 10 are realistically which actually require a CRP process because of a problem. 90s are, means of recovery. So what we can also explore is that as and when a matter is filed, we can have a 30-day mediation or some option where we can look at it, whether there's a possibility to look at a settlement through a third party immediately they're happening, or we go to the full process of CRP without wasting the time of the court. What usually happens is dates are taken multiple times, which takes the load on the day-to-day daily cost list of the actual matter which are to be implemented. So I think that's something can be also tweaked a bit to take it forward.
Sure. No, thank you, both of you. I mean, if I look at it, what I'm concluding is, this is a case of 2 R's and 3 C's. So it's resolution versus recovery. I think IBC's eventual goal is resolution because, we want businesses to be sustainable, and if they are not sustainable, to have a seamless closure. But I think there is a path to achieve that. The 3 C's is what I believe influences the way the creditors are, today influenced, given the ownership structure of our banks, which is, the influence of CBC, CBIs, and CCI, is somewhere very silently, forcing the hand to look at recovery over resolution. And hence, I think some of these things need to fall in place. Maybe the government needs to think about it. Maybe the regulators need to talk to each other. But at least I found this, discussion very enriching. I hope the audience thoroughly enjoyed it. I want to thank firstly Mr. Raman and Mr. Kumar for being candid and sharing your perspectives. And equally wanting to thank Legal Era for setting such a platform where, all of us with industry experience can come and share our views. Thank you so much. And over to you, Kavya.
Thank you.
Thank you very much.
Thank you, Tarun.
Thank you very much indeed to all of our speakers as well. Thank you very much, Tarun, for beautifully moderating that session. Thank you, Mr. Srivals and Mr. Siva, for joining us this afternoon. And we managed to have a fabulous start in the morning with our keynote speakers. And I think we had a befitting end as well to the Insolvency Summit. So once again, I'd like to thank you all for joining us this afternoon. And with that, ladies and gentlemen, we come to the end of the 5th Insolvency Summit. And I do hope that 6th Insolvency Summit, we do get to meet face-to-face in a live event. That should be the plan. So we look forward to that. But thank you so much. And thank you once again to all of our speakers as well. Thank you very much.
Thank you.
Thank you. Bye. Have a good day, everyone.
Goodbye, sir. We're going to request you to click the exit panel. And with that, ladies and gentlemen, all of our delegates, all those who participated as well, thank you so much for keeping those questions coming. And with that, we'll be back again with another interesting edition, another interesting topic for all of you. And till then, do stay tuned. And in case any further queries on the kind of shows that are about to take place in future, please do connect with the Legal Era team, with all of us, and we'll keep you posted about our upcoming conferences. So with that, this is Kavya signing off. Have a great day ahead and see you around in our next show. Goodbye.